Ladies and gentlemen, fellow traders, friends, welcome to the live show. Haven't seen you for a week, so there, let's get to it. Let's talk about it. I'm sure you saw that thumbnail and you've all heard that before. Pretty sure you've all heard that before. We're going to go into detail and we're going to talk about it today. Get a real job? Maybe you should stop trading and get a real job if you're not going to treat this like a business, like it's your income, like it's something really serious. So today, I am going to talk about why most traders fail. It's really important to go over that topic in detail and really talk about why most traders fail. And also the mindset between treating it as a hobby or just something in the background or as a profession. There's a different mindset to that. Your own mindset, yeah, patience, FOMO, all those things that are causing you to lose in the markets, very important. When should you actually consider quitting? Also, another important factor, should you give up at some point? Because most traders quit just before they break through and succeed. This is another issue we need to talk about today and go over in detail. And what it really takes to survive in this market long term. Guys, I've been doing this for 34 years. I don't know why. I think you get addicted to it. Happy Thursday. Hello, Elaine. And good afternoon from India. There you go. Wonderful to see you. Welcome to the show. It's lovely to see people from all over the world. And we all get together in this one little place and we have a little chat on the side. And you ask your questions and we chat about trading. Really great, isn't it? So let me just move my picture out of the way. But before I do that, don't forget, guys, trading is risky. Most traders do lose money. And if you don't like losing money and you don't like risk, you know what to do. You shouldn't be trading. Let's get this picture of mine out the way into the top here so that we can actually see the charts we're looking at. Let's have a look at the charts. And then we'll get on with that topic. That topic of should you stop trading? Should you be a trader? Should you get a real job, as they always tell you? How many times have you sat with your friends and felt kind of strange because they don't understand what you're doing? They don't quite understand how you make your living or how you make your income. Thing is, a lot of people will say to you, get a real job. That's, because they seem to think that pulling things apart and building tables and stuff is a real job and trading is not. Whole problem here is trading is a seriously difficult career and it's a seriously stressful career. Most people don't get it. But when they figure out that you know what you're doing, when they figure out that you're actually making some money, then it becomes, where should I put my money? How should I invest this? Where should I put that? Then you just don't get left alone. You've got to look at it from that perspective as well. While we're here, let's just quickly have a look at the charts and see where we are at the moment. This is our US dollar, Japanese yen. It's looking a bit like a petulant child at the moment. Every time it goes down like it's supposed to, it bounces back up again and goes boof and tries to go back up to the resistance again. And then it comes down again. And then it tries to get back up again. They whip it down and then it bounces back up. It's really struggling to stay down. It's not really staying down, is it? Keeps on going back up. US dollar, Canadian dollar bounced off the support, almost broke the shoulder, but hasn't broken the shoulder yet. So be cautious. It's not quite going up yet. And it's still a whole head and shoulders on that day. My big one, though, is the Bitcoin. Look at the Bitcoin. It keeps sucking people back into the trade, and it's slowly but surely dropping off. It's slowly but surely falling off the bus here and going down. That's actually quite interesting, that one. But the big one is the S&P 500, which is doing absolutely nothing. It's just hanging around in this area doing absolutely nothing. But that said, we're waiting for the Fed. We're waiting for interest rates. I think all the focus at the moment has now shifted towards the interest rates. Now, the problem with that is these kinds of fundamentals are actually quite an issue and quite a problem to everyone, because what actually happens with these kind of fundamentals is they move around too much. They basically, you think, oh, they're going to cut the interest rates, so I'm going to buy. And then you buy, and then they say, yeah, but we're only going to do it once, and blah, blah, blah. And then it all goes pear-shaped and everybody starts selling again. You can't really trade into those kinds of fundamentals. You've got to look at the bigger picture rather than just looking at interest rate cuts and that type of thing. But it is important to the market. It is very important. If they're going to be cuts every month for the rest of the year, for example, then you know that it's going to move the market in a certain way, and the dollar's going to move a certain way, and it's going to affect your trading. But in general, the focus is on that at the moment. But even with the focus on that, you have to understand the market is not really moved as much by that as by the flow of the money and the amount of money that's available in the system at any one given time, and the debt and that sort of thing in the country. There's a much bigger picture than just the quick jobs figures and interest rate cuts and things like that, and Fed's in focus and all the rest of it. And then they're going to go and change the Fed governor, and that's just going to change the whole feeling and the whole story behind it. And it's going to affect crypto, because will they be friendly to crypto, or will they be enemies to crypto, and so on and so on. Gold, I actually called it short because it hit the supply of money. I was waiting for it to go down. It hasn't gone down yet. We are waiting to see what happens with that particular trade, but it's an interesting one all the same. And we've got the NASDAQ, which is the tech. And the tech is actually pushing the S&P 500 at the moment, and it's been in a bearish phase. Trend resistance pointing to the downside, and it looks like it's a little red candle again, which is quite interesting. So hello to everyone, and it's great to see you all here. So now what we're going to do, we're going to talk about why most traders fail. And, you know, should you get a real job is a question that I'm sure you guys have heard absolutely everywhere. It's probably one of the most irritating things to hear. You know, should you quit trading? Should you give it up? Should you do something else? It's absolutely soul destroying when you're sitting in a crowd and nobody respects what you do, and people say, "Ah, you should get. That's not a job. You can get a real job." You know, that sort of thing. It's a terrible way to feel. But why do you feel that way, and what's it all about? Well, the reason most traders fail is mainly because, firstly, they listen to YouTubers like myself, and you see some guy sitting there saying, I turned $100 into $1 million, or I turned $300 into $5 million, lying back in their chair, looking smug. You know, like, it's absolutely ridiculous. And it convinces you to get in there and follow what they're doing, and it just messes you up completely. And then they start showing you all kinds of fake statements, and I can prove this, and showing you a phone with little things on it. It's not the way to go. It's not the answer. So what I always tell traders is, if you're looking for information out there, like from people like myself and others, just take all the information, collate it together, and figure out what works for yourself. Don't backtest it, forward test it. In other words, put it on a demo account and see if it works for you. See if this is something that's going to apply to you, or if you can apply it somehow to the system that you're actually working with, something that can do something for you, something that will work on your system, let's say. That's the best way to go about it. Because the big thing that with trading is charts are not going to make you money. We know that. We work charting on historical information. So in other words, we look back on the chart and we decide that in all probability, what happened in the past will happen in the future again. So that's how we base everything on our trading. So we look at the past and we say, well, that happened before, perhaps it'll happen again. So we draw little resistance lines in, we draw little support lines in, we draw little trend lines in, and we say, or we have MACDs, or we have moving average crossovers, or whatever the case. But as I said in one of my posts recently, if past history could predict the future as accurately as you think it can on a chart, then historians and librarians and those types of people that read books would be billionaires because they'd have all the information that you and I don't have. They'd be way ahead of us. Clearly, they'd be way ahead of us. Of course they would. And if charts could predict the future as accurately as you think they can, then everybody would be doing this, and everybody would be billionaires as well. And everybody would be turning their $100 into $1 million and lying back in their chair looking smug like they do in the thumbnail, you know, that smug look. That's just, I don't know. I don't know why people follow that. I don't know why people get into that, but charts don't make you money. You need a business plan and you need a strategy. So the most important thing, and this is why I say that mindset difference between treating this as a hobby and treating it as a profession. This is a profession. And to achieve success with it, you have to have a plan, some kind of business plan. I give you that business plan in every single one of my videos that I put out there. Maybe I'll give it to you today in the live show as well, for those of you who haven't heard it. But it's really, really, really important for you to understand that you need a plan. Because trying to base your trading on a chart or trying to make money from a win rate, trying to make quick scalping profits. There's a guy out there, and somebody commented the other day that I bounce around too much when I'm talking, but just bear with me. If you don't like waffling and you don't like me bouncing around, you're watching the wrong guy. But there's a guy out there who feels that you can just take $5,000 and buy the market at the bottom of the market, and you'll just, you know, make a fortune. And I don't know anybody that can call the bottom of the market, or for that matter, the top of the market. So, you know, there's so much out there that just doesn't make sense, that just doesn't really work. So predicting the future is not something that you can do with charting. You're not going to do that with charting. You're going to have to work. So this is for example, oil is breaking to the upside. It's breaking through the resistance. It's going to break to the upside. There's a green candle. It's going to go up. Perhaps it's a 50-50 trade. So you're looking at it as there's a trade here. Perhaps I should take this trade. Perhaps I should look at getting into this trade. You see, fear plays a big part as well. And fear is dependent on the amount of money that you have in the market. So if you have a lot of fear, then you can't trade. You can't trade properly. It's gonna be difficult for you to trade if you're sitting with insane amounts of fear. For example, if you have $1 million in your account and you take $100,000 and you start trading with it, and you put that $100,000 into the market, then you're going to be trading with 10% of your overall wealth. And if you lose $10,000 of that $100,000, then you've lost 1% of your wealth. You're probably not going to stress that much. You're going to be sort of, I lost some money, I'm upset, I'm a bit peeved, but I'm still okay. But if you only had $100,000 and you put the $100,000 in the market and you lost $10,000, then suddenly you've lost 10% of your wealth, then fear starts to kick in. Fear starts to take over. Worry starts to come in. Stress starts to come in. You stop sleeping at night. If that happens to you, you might want to get a real job. You might want to get away from this. But if you want to stay in trading, you have to understand that you've got to work with the strategy and you've got to work with the plan. The strategy is simple. Keep your risk the same on every single trade. You can decide on that risk. You can decide, like I do, that I'll risk 1% of any particular account on every single trade. Or you can decide it'll be 2% or 5%, or you can just say I'm going to risk $1,000 on every single trade and that's it. If you're trading with a very low amount of money, let's say you've got very little cash and you want to get into trading and you're thinking, well, I need to make money quickly. So what do? You get into trading with $1,000. In that case, you're going to need to risk a much higher percentage per trade to make any kind of money whatsoever. And if you're thinking of trying to make money for a living, don't do it with $1,000. It's most certainly not enough. but you're probably going to want to risk a much higher amount to build that capital off of that very small amount that you've got. So risk becomes a factor, but you've got to risk the same on every single trade. You can't turn around and say, well, I like the US dollar Japanese yen, so I'm going to risk $1,000 here, but I really don't like trading the NASDAQ, so I'm only going to risk $200 here. Because you know what's going to happen, don't you? What's going to happen is you're going to win the NASDAQ trade, which you hate so much, and you're going to lose the US dollar Japanese yen trade with $1,000, and your losses are going to be more than your wins. And what do I always tell you? I always tell you, make more on your wins, lose less on your losses. And how do you do that? Well, it's quite simple. Let's say you take this trade. You say, I'm just going to go short here. I'm going to take a short. I'm going to take a short. I'm going to go short here. So there we go. I'll pick it. So I'm going to go short and put my risk there. My risk is $1,000, and I'm going to put my take profit down there. My profit's going to be $4,000. That's my plan. That's my trade. Now I've got a risk to reward. In other words, my risk is $1,000. My reward is $4,000. Just let's say, and it might not make it, might not get there, but at least that's your plan, and you have a plan. So you want to win more than you're losing. And then I say, if your trade becomes invalid, dump your losses as quickly as you possibly can and as much as you possibly can. Don't hold on to your losses for 150 years. That's another area where traders tend to go wrong. You see, what it takes to survive long-term in the market. What does it take to survive long-term in the market? The only way to survive long-term in the market is with risk management. In other words, you have to manage that risk. Stay in the game. It's so important to stay in the game. I see a lot of traders out there that just go crazy and they just throw the kitchen sink at it. And then when they lose it, they go, oh, I blew the account. What happened? How did I do that? You know, out of the game. You don't blow accounts. What you do is you manage the risk to the point where you can stay in the game, where you're not getting pushed out of the trade every single time. If you decided to go short on this trade, you would go, let me put my risk above the prior high. Let me put my take profit down here at the support level. Let me make more on the win and lose less on the loss. Even if it's almost 1-to-1, it's okay, as long as it's close to a better win than a loss. You don't just click out of your wins. You try and put a trailing stop behind your winning trades. The mindset to change here when you're trading, very importantly, is to understand that what you want to do is you want to try and turn your mind upside down. At the moment, when you go into a loss, you start trying to dollar cost average it, you start trying to get out of it, you start trying to recover from it, you start trying to go into a profit with it, and it's a relief trade. And when it gets out at $0, you're like, I got out of that one. Phew, that was close. I almost lost $1,000. Whereas you should be switching your mindset around, and if it goes into a win, start getting excited, start working that trade, and start working it into a bigger and bigger trade if you can. Start trying to make more money on your winning trades and cutting your losses short and getting out of those losses. So the big problem you're going to have in trading is when people tell you to get a real job. When I tell you, if you're not going to do this, you're going to need to get a real job, because you're going to lose money. You're going to just risk willy-nilly. If you're going to have fear, if you're going to struggle with fear, if you're going to struggle with fear of missing out, if you're not going to be patient. Patience is such an important thing in this game. So important. I can't believe that people get into trading that are impatient. If you're impatient, you're going to lose. You're going to lose money in this game. Go and get a real job. Don't do this. It's not going to work for you. Okay? You have to be so patient when you're a trader. Understand this. Because these things take time to come to you. You have to wait for the trades to come to you. You can't chase the trades. You literally got to wait for the trades to come to you. You chase the trades, you're going to lose money. If you start on if you're starting on the day and you're working on the 4 hour and you've got your trading going calmly, and then you get bored and you drop to the 5 minutes, you're going to lose. You're going to lose on those day trading charts, those 5-minute charts. It's going to affect your trading in the most insane way. You're going to lose money so quickly you won't know what happened to you. Did you know that 99% of traders lose trading on 5-minute charts and 1-minute charts? Simply because the information on these candles is just not good enough. It's just not strong enough for your trading. In other words, imagine the amount of 5-minute candles that are in a 4-hour candle. You know, in all my trading years, been doing this for 34 years, I've never actually calculated that. But I'm sure it's quite easily calculated by some person with OCD that likes to know the numbers or something to that effect. So all I say is, if you're not going to have a plan and you're not going to get over the fear and FOMO, fear of missing out, is you take a trade at the wrong time because you're scared you're going to miss out on the trade or something like that. And if you're not going to follow that plan, then you are going to have a problem staying in the trading game. It is going to be difficult for you to stay in the trading game. The reality is most people lose. 75% of traders lose on average. Some days it's 69%, other days it's 85%. On average, on leverage trading, 75% of traders lose. This is not investing. Investing is set and forget. You buy your investments, you put your money in there, you buy shares, you leave them, you forget about them. That's going to make money over time. Leverage trading, you see, I had the aha moment many years ago when I kept watching the TV shows because we didn't have YouTube. We couldn't go and watch YouTubers like me. I couldn't go and find out all about what's going on in the markets. We had to watch the news channels in the evening, and then they would have a panel of experts that would talk, and you could follow what they said. And they, every single time, and even when I met them in person, used to say to me, the only way to make money is with time in the market. Time in the market. And I used to think, if I'm leverage trading, how am I ever going to have time in the market? How am I going to make money with time in the market? And besides, I can't wait 30, 40 years to make money. I want to make it now. That's why I'm leverage trading in the first place. If I wanted to wait 30 years, I'd just have my investment account and just wait for it like Warren Buffett did. And then he reached 99 and what now? So I want to make my money quickly. So how is time in the market going to work? So I sat and thought about it because I'd been trading for many years without thinking about it, not worrying about time in the market and just, trading and following charts and hoping that win rates would make me money. And I kept on ignoring the fact that they kept saying you need time in the market. And then suddenly it all hit home. Suddenly it all came to me. And I woke up and I thought, hang on a minute. If they keep saying time in the market, then I have to figure out how I can apply that to leverage trading. How can I apply time in the market to leverage to trading? And the only way to do that is by managing your trade, by managing your risk, by keeping your risk the same on every trade. And the trick is make more on the profits. You see, that kind of converts your leverage trading into what we call time in the market. It kind of converts the whole thing over. Instead of time in the market, I'm telling you to make more on your profits. I'm telling you to run your profits, telling you to follow your profits. Don't worry about the charts. Forget about the charts. Forget about all the complicated jargon that everybody teaches you. All this stuff in the markets, it drives me insane. All this rubbish about abbreviations for everything and telling you to move the green cheese to the left and then move the brown cheese to the right and then put a little knife in the back and then move it this way and move it that way and then you can take a trade or make a profit or something like that. Absolutely ridiculous stuff out there. And if you can just keep it simple and you can just forget about all that stuff, then you're going to be able to take your trading to a different level. Then you're going to be able to move your trading to a different level. But what's going to happen when you're sitting with your friends, they're still going to tell you to get a real job. But then when they find out you're actually making money from it, they find out that you actually know what you're doing when you're trading. They're either going to want to learn from you, learn how to trade, And I've always been open to teaching my friends how to trade. It's fun. You know, they sit next to you and you show them how to trade. You're actually showing them something that you can do. But I've always been that type of person. That's probably why I have this YouTube channel as well. It's nice to show people a bit of information. But then a lot of the other friends will be asking you, how should I invest my money? Where should I put my money? How do I put my money? And, you know, I literally have to tell people sometimes, look, I know how to trade. I know how to invest, but I'm not a financial advisor. I'm not here to advise you on your finances. And everything I say doesn't constitute financial advice. Nothing I say constitutes financial advice. I can just tell you what I'm doing. I can just tell you what's worked for me and what's happened to me in the past, and it might happen to you in the future. Most traders make the same mistakes. Every single trader that I've ever come across, if you talk about something, they've also done it. They've done the same thing. They've made the same mistakes. They've tripped over the same hurdles. So you can get a lot of information from other traders. It's interesting, isn't it? I'll take questions if you got any. I see Beverly's here. Good morning. And okay, wonderful. Rob, you tell it like it's no BS. Yep, totally. GPP, catch short. Don't quit, just stop, take a break, study the market some more, change perspective, look at the market differently, and then start again. You'll thank me and later. Yes, that's actually a very, very good comment. And that is, if you're taking a loss and you're having a bad week, if you're having a really bad week and things are going pear-shaped for you, you're thinking, wow, when am I ever going to get a win? What I used to do quite often is if I take 3 losses in a day, I walk away, and I come back tomorrow, fresh look, fresh outlook, look at the market from a different perspective, because sometimes you just get sucked in to a perspective that just doesn't make sense, and you're just going the wrong way effectively, and it really, really doesn't help you at all. I see that is starting to go short now. That's quite interesting. So that is actually maybe going to go down. I don't know what you guys' feeling is on gold, but I'm thinking it's going to continue on the short route. There's a lot going on in the markets in the sense of the S&P 500 and the indexes and that sort of thing. There's a lot of focus on these interest rates and will they cut? Will they keep them? You know, all that type of thing. What happens in the US happens all over the world. So there's a lot of focus on that at the moment. There's a red flag here that the S&P has done nothing. It's just sitting around here waiting for direction, which means all the informed money is confused. It's not really sure which way to put the money, and it's holding, and it's holding. They're waiting. They're waiting for information, so nobody's quite sure which way it's going. That's how you read candles, just so, by the way. You look at candles as, what are the professional traders doing? What are they thinking? What are they on at the moment? And that's what you're following. You're following most traders. You're following what they're thinking, what they're doing. And if they're undecided, then it means they're waiting for some information that we don't have. Charts aren't magic symbols. Candles aren't magic symbols. Resistance lines aren't magic lines. Support lines are not magic lines. They're just, we draw them there because it's areas of interest. So that resistance line isn't a magic line. It's an area where we know that the informed money has been selling, has been turning it around. So if the informed money has been moving it around there, then they'll in all likelihood probably do it again. So that's what you're looking for. That's what you're putting your orders in there for and following the market. And that's why sometimes it'll go wrong, because the more you chip away at this, sometimes it'll change. You know, you could just wait for resistance every single time and sell until it goes wrong, and then take your loss on that one, a very small loss, and just say, okay, they've changed their mind now, it's breaking to the other side. You could do that as well, because all you're doing is working on the odds of how many times the informed money is going to go in that direction. and follow it effectively. That's how you trade. You don't try and think of these as magic symbols or anything like that. There's no magic in the market. No magic at all. Yeah, if not trend lines, then what? Crystal ball. And that's what I always say. Is there is no one that can predict the future, or take information from the past and move it to the future and say this is exactly what's going to happen. That's why trading is 50-50. That's exactly why trading is 50-50. But what we do as traders is we say, okay, let's say we choose trend lines as our base, or we choose support and resistance as our base. Some of you might be using other systems like moving averages, whatever. But let's say you've chosen trend lines. So now you've drawn that line in the sand and you've said, well, if it breaks below that line, I'm going to sell. If it breaks above that line, I'm going to buy. And you've got your little rules in place. Like I've put the rules in place. We trade three ways. We trade in a range, trade with a trend, we trade breakup. Simple, really, and that's as far as it goes. Now I know which way I'm going to trade and how I'm going to trade on every single trade. What's my main job in the market on the charts? My main job in the market on the charts is to look for the informed money, to look for what they're doing. Because what they've done in the past, there's a good chance they'll do it again. As I said to you before, if history was the only thing that told you what's going to happen next, historians would be billionaires. But it does help you to determine where there are points in the market where there's some money and something happening. So that's why we use these breakup structures. That's why we use these resistances and supports, because it's where informed money are making changes and doing things in the market. And that's what you're looking for. There is the only way that you can trade properly is either with these lines, or if you have an insanely good understanding of the fundamentals. But the difficulty of the fundamentals is this. You don't have the same information that those guys with the informed money have got. They have systems that you can afford to put on your desk, which give them an advantage over you. They've got information seconds before you have, and they've also got all the information and the best information. They pay a lot of money for that information. If you want to pay that kind of money for it, well, good luck. Could cost you up to $10,000 a month for a good system. Okay. So, if you are going to go with the fundamentals, then if you go with the smaller fundamentals, like we're talking about, for example, interest rate cuts and things like that, the smaller fundamentals, then you need to start looking at really, really insanely expensive systems, because you will look at it and say, oh, they're cutting interest rates, and everybody knows this up front, so it gets baked into the information before it happens. You've got the information, it's in the information before it happens. You can literally see the markets are moving a certain way before it comes out. When it comes out as expected, normally. If it doesn't, then it's way off, then it'll move the other way. But generally it comes out as expected, and then it starts moving in that direction a little bit more, and you think, oh, I got this right. And then it goes and bounces and goes the other way. And the main reason for that is because they dig into those reports and they find other stuff which you and I don't know about, as well as the fact that all the information was already baked into the price before you got there. So it becomes quite difficult to trade fundamentals unless you've got some really expensive systems at your fingertips. And that's why we use, as retail traders, a lot of technical information. Because what the technical information does for us, it tells us what the professional traders are doing. It tells us what the informed money is doing. And then you can follow that informed money to the best of your ability, as best as you can, let's say, and you can take a trade based on that information. That's why people don't understand when I say trading's 50-50. I don't mean as such that every single trade should be 50-50. I mean, you have an edge, you should be getting it right and whatnot, but the best traders in the world have got a less than 50% success rate. The reason your trade becomes 50-50 is because even if it starts out right, it might not continue right, and it might not reach your targets. For a trade to reach its target and to the business plan to play out properly, your trade is always going to be a 50-50 chance. Anyone can scalp. Anyone can scalp and win 9 trades out of 10. And then on the 10th trade, lose all that money they won on the other 9. And that's soul destroying as well. That's not fun, is it? How can that even be fun? That's horrific. You take 9 trades, you work really hard at it, you win those 9 trades, and on the 10th trade, it takes all those wins away from you. That's horrific, man. Terrible. Absolutely terrible. Great British pound, US dollar. I did mention that this was short, and there you go. It's short. Oh, I'm actually in this trade. And I'm making money. Can you believe it? Oh, that's fantastic. Really good news. Okay. Great British pound, US dollar is going short, and it's making some money. Okay. Great stuff. Bitcoin is going down, EIGHTCAP FC, as far as I'm concerned. I shall go to Bitcoin here and show you what I think. That you see, my opinion on Bitcoin is it keeps sucking people in and then dropping a bit, sucking people in and then dropping a bit. This thing should go to 40,000, because if you look at the day chart and you look at the head and shoulders on the day chart, shoulder, head, shoulder. If you project that down, it projects down to 37,000. Now, if this head and shoulders plays out, which it is, it's breaking down, okay? This could easily go down to 37, 38,000, which is real serious stuff. It's a real serious trade. And while most people don't believe that can happen, and the important thing to understand about crypto is it's not based on any asset value. It's not based on anything tangible. It's based on 2 traders deciding the price. So that makes it kind of complicated to determine, you know, what it's going to do or where it's going to go. But the one thing I can tell you is the head and shoulders is there. It's broken below its support line. It's milling around here. It keeps sucking people back in. It keeps breaking a bit to the downside. It does look like it wants to go down. It most certainly looks like it wants to go down. So it could go all the way to 50,000, 40,000 actually. All right, so the US dollar index, the Dixie, still below 100. Toricha has just made the cardinal YouTube content trader mistake. She bought a 517K Ferrari suggestion. She is more content provider than trader. This guy says, hey mate, do you trade SR on H4? Yes, I do. What I normally do though is I'll look at the day and I'll put the resistance and support on the day and bring it back to the H4, because that's just a guideline for me, the support and resistance. Then I know where my range is, and we trade 3 ways. We trade with the trend is your friend, we trade in the range, and then I put the trend lines and I trade breakout. Okay, so breakout, it breaks out the resistance, breaks out the support, or if I put a trend line in here, it means it's breaking through that trend, and then it tells me the change of direction within the support and resistance. If you want to know a lot more about that, I'm not going to sit here and go over it in the live, but if you want to know a lot more about that, I do point it out in most of my videos. In fact, some people have said, Rob, you're repeating yourself. So, you know, there you go. As I said to someone the other day, you know, I'm actually a trader, not a YouTuber, because the guys are sometimes quite critical of my YouTube abilities, let's say, and the things that I do. And you talk. One guy says you talk too slow. The other guy says I can't stand watching the cuts every 2 seconds. So you never know. Do I need to be fast? Do I need to be slow? Do I need, you know? So I just do it my way. I just do it my way, and I do it the best way I can. I'm not a professional YouTuber. I've been doing this for a couple of years. I do have videos from older times for fun that I made and stuff like that. But, you know, like really seriously doing this for you guys, a couple of years. And I'm sorry, but I'm not the best YouTuber on earth. I try my best, okay? But like I said to the person in the comments the other day, you have to understand one thing is I'm a trader by nature, not a YouTuber. And I'm trying to make the YouTube successful, of course. And I'm trying to do, you know, everything I've ever done in my life, every business I've ever had, every venture I've ever gone into, I've tried to be the best at, and I've tried to succeed to the top. And I intend to do the same with YouTube. I intend to make it the best YouTube channel in the world if I can, which does seem quite daunting if I look at the millions of other YouTube channels out there. So why do I have a YouTube channel in the first place? You might think, that's insane. Why have you got a YouTube channel? Well, firstly, trading is boring, as you know. I love trading, but it's insanely boring. What the hell? And I don't want to, I've had other businesses in my time, and I don't want to do that anymore. So I love the thought of YouTube, so I decided to do this, okay? And it's better than playing games, let's be fair. And it's a lot of fun. And it's a challenge for me to make it something insanely good. Why would I make a little bit of money from it? Why not? I don't know any trader who doesn't want to make an extra buck somewhere. Why not? Because you know what the insane thing about a trader is you can have as much money as you like. Oh, it's coffee with Rob. You can have all the money in the world. You can go and buy a 517K Ferrari. Lovely. What was it? Oh, it's a $517,000 Ferrari. Okay, wonderful. Okay. I thought it was a code for a Ferrari for a moment there. I've lost touch with what the different models are. Anyway, you can have as much money in the world as you want, and you can be as rich as you want to be. When you take that money and you put it in the markets and you're trading with it, you're very reluctant to take it out, especially if it's in your investments. But even in your trading, you're very reluctant to withdraw that money. You prefer to leave it in trading, okay, because that's the main focus. So money that you live on kind of comes from everywhere else effectively, and or withdrawals, or, you know, money that you keep aside. It doesn't matter how much you've got. People just think that way. It's just a psychological thing. Anyway, that's what I think. I like to just keep it in there and just maybe open another trading account and put some in there. And, you know, this is my whole life is about that. So, yeah, I think it really doesn't matter how much you've got. Would I go out and buy a $517,000 Ferrari? Nah, not anymore. No, I've gone past that in my life. I've got a picture of me racing one around the track once. Nowadays, if I try to get into one, it's embarrassing. Okay, I'll fall out of the damn thing. But no, not for me anymore. Not interested in that sort of stuff. I'd rather invest in stuff. I'd rather invest in like property or shares or whatever is out there, and whatever spare cash there might be, I'd rather leave to my children. So I don't know. I've gone past all that rubbish. Not really interested in it. Not really interested in being flashy or anything to that effect. It's more fun for me to successfully do something, to build something, to succeed at something. I'd rather build a table and see it succeed than go out and buy some shiny thing. It actually irritates me when people run around showing off and showing how much money they've got and that sort of stuff. And besides, you know, my old man taught me at a very young age, never show your hand, you know, never play your hand. It's an important factor in life because you can leave yourself open to a lot of trouble as well. Just my 10 cents worth, guys. Just my 10 cents worth. When I trade the 4-hour candles, the time left on the candle seems very crucial. The time left on the candle is very, very crucial. You know, don't preempt a trade on a 4-hour chart. Don't wait for it to close and read the candle, read the chart, read the position. You know, before if you're waiting for a candle, just wait and read the candle, read the chart. I do like to have my research done, know what I want to buy and what I want to sell, and then see if it comes into play. And if it comes into play, take the trade and just leave it in and leave it there for a long time. I mean, I actually forgot that I had this Great British Pound US dollar trade on. and I've got it on a number of accounts, most likely. I've left it on, and I've actually forgotten about it. When did I take it? I'm not sure. Was it yesterday, the day before? That I don't know. I've got other trades on as well, but it doesn't worry me. I don't sit and stress about it. I'm not a 5-minute trader. I'm not watching it thinking, ooh, what's happening with that trade? It's I leave them. I've chosen the direction. I know which way it's going. I should actually be more cautious on the sense that I should be moving my stop loss down into better positions and things like that, because that's what we do. But yeah, this one I actually did slip up on and forget about. Okay, all right. But I do have a lot going on my plate at the moment. I mean, I've got my father-in-law lying in hospital, ICU for 4 weeks. Can you imagine? Intensive care. I don't want to see the bill. But anyway, what can you do? And then yesterday, my brother-in-law moved out of my house. He was staying here for a long time. And now he's finally got his own place and moved on. So that was busy. So it's been a busy few weeks, to be fair. Yeah, peaceful now, though. Trading is repetitive. Well said. I got a in the chat here. Life with Sophia does say trading is repetitive. It's incredibly repetitive, and if you're not patient and you don't like repetitiveness, then you don't want to be trading. Somebody said to me that a lot of my what I say is I say it over and over again, or I say it twice in one video, I'm repetitive or whatever. Yeah, trading is repetitive as well. If you can't stand repetitiveness, you're in the wrong game. Get a real job. As I said in the thumbnail, get a real job. You're in the wrong job. This is the most repetitive thing on earth. I remember when I started out as a young man, I worked in the corporate world for a few years before I started working for myself. I was in my 20s. And I remember walking down a production line and talking to a few guys in the production, because I was fortunate enough to be slightly more senior than that lot. And there was a guy there that had been fitting little suspension parts for, I don't know how many years. It could have been 10 years or somewhere around that area. A long time, right? Very long time. And he looked at me and he said, yeah, I love my job and I love coming to work every day and this is perfect. And I looked at him, I thought, every single day he comes in and he just puts that bolt in. He just puts that bolt in, zoom, 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 every single day. How does he do that? How does he do that? I mean, I didn't think I would ever be able to do something like that. Every day he comes in, same job. And he said to me, I've been doing the same job for the last 10 years or whatever it was. They never changed his job. He just did the same thing. But then I realized you could smell the weed, and all that in there. And okay, these guys are just like robots, carrying on. But trading is a bit more interesting than that, because I still learn something every day at my age, and all the years I've been trading, and there's more to work out, and there's more to it, and there's more things to think about, and you have to be a little bit math savvy, and you have to work out your trades. You can't just be some robot just doing repetitive stuff. So it's not as repetitive as that. There is research to be done. There is things to think about. You can put the fundamentals in play, and there's a lot of stuff to work out. And, when I used to get bored trading, I'd spend a lot of time researching possible other methods, other ways to work out what's going to happen next and things like that. And I'm sure you guys do that as well. I didn't just go dropping down to the 5-minute charts. I would sit and do an insane amount of research on the next shiny tool or the best way to possibly trade, and spent a lot of time doing that. I'm sure a lot of people do that. I'm sure I'm not the only one. Like I said, every single trader I've come across tends to do the same things over and over again. Every single one. Can't tell me there isn't one. Here's the euro. US dollar is also going down, by the way. Also picking off down to the bottom. Hi, Sir Lunchlot. SLA's here. It's good to see you. Okay. Better to take your trading profits invested for retirement. At the end of the day, I always tell young people, youngsters, do yourself a big favor. If you're 30, 40 years old, you're the people I'm speaking to, you know. But even if you're older, it's fine. I've shown the guys on many occasions, how to invest. Investing is so important. Now, trading is fun. Trading keeps you busy, and trading is something that you can do to make the extra buck here and there. But trading is not going to make you the money that your investment account is. And you might think, Rob, are you insane? Of course, trading should turn my $100 into $1 million. That's what it's all about. Well, it isn't. Actually, it isn't. If you took that $100 and you put it away every single month into an investment account with shares over 30 years, you would fall flat on your back right now if I showed you how much money you would have in the account. It's insane. It's incredible how many millions will be just lying in your account just because you invested in shares over 30 years and you put money in every single month. And you don't have to put a lot in. You might want to have an initial amount. It's much better than a pension fund, much better than a savings account, much better than any of those. You just keep putting it into, and you don't have to keep increasing the amount of shares you have. You can just stop at 10 shares and say that's enough for me. I actually have overseas accounts and I have local accounts, brokerage accounts for my investment accounts. It's good for me because it gives me that offshore exposure with the rand dollar and that sort of thing as a South African. So it makes it better for me because I'm earning, for example, in dollars or pounds or euros. So having offshore accounts is decent for me. And that's another thing where I said to you earlier, withdrawing money. You know, I don't want to withdraw money from offshore accounts, so it just stays there. So it's like almost like you never use it. It's crazy. Doesn't make sense if you think about it, but it's nice to see things grow. It's exciting to see things grow. But for the youngsters, guys, just if you've got a small cash amount to start with, do that. Choose a few shares. Don't choose penny stocks. Oh my goodness, please don't choose penny stocks or things that are going to close. Choose the blue chip shares. Goodness me. Choose the big ones. Choose the name brands. Choose the McDonald's, the Coca-Cola, the Nvidia, the big stuff, the Amazon. But choose it in a way that, not with charts. Don't worry about the charts. The charts are not important in that. Charts are worthless when it's investing. Go and say, I think Amazon's going to do quite well. Why do I think Amazon's going to do quite well? Well, if I look around, they're improving and they're delivering to people's doors and they're growing and you can buy just about anything you want off them. And there's a whole number of reasons you can look at it and say, well, this looks like a decent company to look at. And then if you're really savvy about financial statements and assets and liabilities and that type of stuff, then go in, you can get it on Yahoo, Bloomberg, all the others. And you can just go and have a look. It'll all be there for you. The information is public. And you can even type in Amazon and go in and the information's there if you're an investor. It's public. You can get the information. Once you become a shareholder, you can go to the shareholders' meetings and you can listen to what they've got to say if you like. No problem. Easy peasy. You can get all the information you want on the company. Once you buy it, you set and forget it. And you add to it all the time. Now, once you've got quite a few shares, it becomes difficult because you're putting in $100. You're thinking, oh, can't put $1 here and $1. So I don't do that. What I do is I say, this month, I'm going to take my $100 and I'm going to put it on Amazon. This month, I'm going to take my $100 and I'll put it on Coca-Cola, or, you know, whatever. I just add on a monthly basis forever. A bit of savings, okay? That account, believe me, you're going to look back. I probably won't be around by then, but in 30 years' time, you're going to look back and say, wow, if I could have Rob around now and give him a beer, I would, because you just made me rich. That's what I'm telling you, okay? You want to buy that Ferrari, that expensive Ferrari, that's what you do, okay? Trading will be fun. You'll have a lot of fun trading. and you'll make a few bucks here and there, and you'll lose a few bucks here and there, as I've told you. Accept the fact that you might lose a few bucks here and there. Please accept that fact. It's important to accept that fact, really important, okay? But investing, you're not going to lose. You'll have shares that go up and down. What you're going to do with investing is if you're watching your account, just watch. If you see a share that looks like it's going to go bad, for example, you hear the word fraud, or you hear the word bankruptcy, or you hear those nasty words come up, all right? Then take that whole amount, that whole share, don't risk it, just sell everything in that share. Maybe it's Coca-Cola. Just sell everything and go and buy McDonald's or whatever the case and say, well, I'll just take the money from there, put it in there. Safe, no problem, okay? So you just got to listen out for those bad words. That's all. Otherwise, you never, ever sell it. You keep it forever. Forever and ever and ever. Remember, when you sell it, remember this, when you sell it, you have to pay tax, okay? And that becomes an issue. So you don't want to do that. You know, most rich people actually don't take income. What they do, if you have business, you take the minimum income and then you buy assets from the company. So the company that you own buys assets. Those assets, because you bought assets, are now not taxable. And then you go to the bank and you borrow money against the asset, and you don't have to pay tax on that borrowed money, and so on and so on and so on. And it's just, the percentage saving is huge, because if you draw the money, you're going to pay 50% tax on it. If you don't draw the money and you pay it as a loan, the loan's only going to cost you a small percentage. Okay? So it works out as quite a reasonably big saving. Do the maths, but I'm not going to go into detail on that. That's quite a complicated little process. And I always tell people who've got their own businesses and companies and big money, don't try doing your own tax. Employ a tax expert to do it for you. Even if you're a financial wizard, employ a tax expert, because you know what? They know all the tax people. They know all the tax stuff. They know what to pay, what not to pay, how to pay, and they'll advise you the best way and the latest rules and regulations. That's always the best way to go about it. Yeah. Okay. I would only consider buying a Ferrari if my net worth was over $10 million. No, I don't think I'd bother buying a Ferrari, to be fair. That's what I do, dollar cost average into a lot of different companies and index funds. Yeah, that's exactly it. That's what I do. But it's spot and it's investing. You know, I trade for fun. Trading is the thing, you know. But if you really want to make money, you've got to have investment accounts. And I can't sit here and teach people just how to invest. I can give you advice, but well, it's not advice, actually. It's just what I do. It's just interesting stuff, you know, which is helpful to people getting through. US dollar index is actually still below $100. Interesting that, eh? If you take this back, this has really come down quite hard and it's sitting in this range now. It's nicely sitting in that range. I'm wondering if it's going to stay here for a while or if it's going to get out. Because if it stays below $100, we're kind of moving into a commodity super cycle. I have called gold as a short, but, you know, that's, I don't know. That's kind of making me think. As I look at gold, it does look like it wants to come down a little bit at the moment. Boom, 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 boom. When you say any recommendations, expat, what do you mean by that? What recommendations are you looking for there? What to trade? Short gold, I suppose. Short crypto. Bitcoin's definitely going down, that's for sure. Bitcoin's not going to the moon anytime soon. It's going to play out its head and shoulders, and go down to 40,000. You know, I worry about crypto because I look at it as there's a number of factors surrounding crypto that concern me. The one is it hasn't got asset value. It's just fresh air. It's the price decided between two traders, and also at the end of the day, if you think about it, if all the countries move to digital currency, particularly one digital currency, all of these guys are doomed, and everything's already kind of moved digital anyway. If you think about it, you know, when you go and pay for stuff, people use their watch, their phone. It's all digital money. So this is all ridiculous at the end of the day. They were trying to keep it away because they were trying to keep it away from the governments, all these conspiracies and whatnot. But these days, I know our governments looked at Bitcoin and said, do you know what? We're going to watch that now. You're going to pay tax on it. So you're not going to get away with that either. You're going to pay. Recommendations on brokers. I prefer not to give recommendations on brokers. And here's why. Because you're going to be upset with a broker, and then it's going to be my fault at the end of the day as well. If you're looking for funded trading, there's some links in the description. That's up to you. You can go and look there. EIGHTCAP, you get 20% off if you use my code. But for normal brokers, the normal brokers that I use in South Africa, I prefer the GT247, that sort of stuff. They're quite good. Easy equities for investments, that sort of stuff. But in the rest of the world, you really have to look around for yourself and decide what the best is for you. And it also depends, what do you want? Do you want the best costs? Do you want the best platforms? Do you want the best servers? What do you want? What do you want out of it? And how much money do you have to invest? Because that's also going to make a difference as to what they're going to give you, okay? If you're going to open R1 million or $1 million leveraged account, they might open their eyes and be interested in you. If you're going to open a $1,000 account, they'll be like, you're going to pay like everyone else. So, you know, you got to look at it. I always say though, choose a broker that's close to you. Well, at least in your country, okay? If not in your town or your province or something to that effect. Then once you've got that settled, because it's nice to get to know the people you're dealing with. Sometimes I'll even take you for lunch. I don't know. It's up to you. And then you know what you're dealing with. Also with brokers, look at brokers that are, they might be slightly more expensive, but they're bigger. They've been there, done that, sold a few T-shirts, and they might have more to offer you. For example, I know that IG, for example, is expensive. I mean, dealt with them, but they give certain things that other people don't give. They give a lot of training. They give a lot of information. They give a lot of in-depth stuff that other people don't give. So, and they give a lot of really good platforms out as well for people to use. So when I say, you know, when you say which broker, look at what you need and what's best. And then also, for example, IG is good for Europe or good for the UK. South Africa, it's a bit tricky because they're good for shares here, but they're not good for the indexes and Forex and that because they struggle to move the money overseas. So, you know, that scenario. But in South Africa, you can invest with the banks, you can invest with Sanlam, you can invest with a number of different brokers, which are reliable and settled and steady. I've had investments directly on the stock exchange, for example, okay? But those are impossible because if you're not on the floor and you're not a registered broker, then when you try to sell them or buy them, it can take 24 hours a day. In that time, a lot can happen. It's not like we do with a click of a button. Whereas if you invest through a lot of the brokers, banks and things like that, you can just do it at the click of the button. So if you're in America, choose one of the big banks. Go through BlackRock or whatever. It doesn't matter. Just go through one of the bigger guys and protect your assets and stuff. Fine. I use my several different brokers. My favorite broker is Interactive Brokers. How mostly trade futures, but I prefer Forex brokers for HF trading and overnight, mostly index metals. Interactive brokers allows you to trade everything with one account. Okay, so spreads are important to expat trader. You see, you've already answered the question there. What's important to you? What's really important to you is the spreads. So have a look at that. I'm from Brazil. Welcome from Brazil. Good to have you here. Thanks, Rob. Great. Okay, right, good. So that might help a few people. I'm pretty sure that it will help a lot of people somewhere down the line get to a good point with their trading. So who can comment which way Bitcoin's going to go? What's your guys' belief? Do you actually think it's going to go long now and go back up to 100,000? Or do you believe it's going to go down to 40,000 like I do? No, you don't have to agree with me. I'd just like to know what you think. And also, you know, the thing about crypto is this, the fact that it's based on fresh air, by the way. Think about this. Imagine if the S&P, the S&P 500 went from 7,000 to 3,500 in 3 months. Imagine what would happen in the world. Imagine what everyone would be thinking in the world if that happened. Do you think everyone would be sitting around calmly saying, oh, the S&P dropped to 3,500 in the last 3 months since December. Wow, imagine that. Perhaps we should be buying. I don't think that's what would be happening. I think the world would be ending. There would be a disaster of note. But when it happens to Bitcoin, nobody cares. Bitcoin was at 100,000, 125,000 just the other day. Look there. There it was. 126,364. And now it's at 65,000. And, at the moment it's 66, sorry, 67. Okay. But it dropped all the way to 50, and I still think it might go to 40. I mean, imagine if that happened to an index. It would be a nightmare, but people are still thinking of buying Bitcoin and thinking, oh no, everything's fine. Everything's okay. I mean, in November, people were still saying to me, Rob, Bitcoin's going to 200,000. And I said, I don't think so. I don't think so, but okay, if you say so. I'm not a crypto expert, to be fair. I've only really been looking at crypto for a short couple of years. So now I look at it and think, all those people that said it's going to 200,000 have now changed their tune and said, oh, it's falling off the cliff. It's probably going to 50,000. There are one or two there that's still quite happy to say that's going to 200,000. Now, here's my thing. There was a guy the other day, like I said to you earlier in the video, that said, if I only had $5,000, that's everything I've got, and I'm going to throw it at the bottom of the market and buy, and then I know that if I do that, I'm going to turn it into $1 million and sit back and look smug on the thumbnail. You know, that smug look. Anyway, so here's the thing. How many of you are prepared to take your last $5,000? I know some of you have got $1 million. That's fine. Let's say your last $1 million and throw it at Bitcoin right now with a view to it going to 200,000. Because if none of you are prepared to do that, then none of you are confident that it's going to 200,000. You see how difficult it becomes. You know, the guy says, just take your last money and throw it at the bottom of the market. See how difficult it becomes to do that, to actually do that, to actually say, I'm actually going to do that now. I remember in the 2008 crash, and there was one particular share that I was humming and hawing about, and it was Old Mutual. And it was down to 4 Rand in rands, okay? And I think that's like 20 cent American cents or so. It had really dropped, and it was up at 20 Rand or something like that before that happened. And I was looking at it thinking, should I or shouldn't I? Should I or shouldn't I? And I was actually fearful. I was actually considering. Eventually, I did buy and made some dosh. I mean, I sold them at like 17 Rand or something. But that's beside the point. It's when it was at 4, I was thinking about it. I wasn't brave enough to just throw all the money at it. And what did I do? I split it among all the other shares as well. Thought, no, I'll buy it that way. Okay. So you have to understand that you can't call the bottom of anything. So how many of you here would throw all your money at crypto at this point right now? So-called bottom of the market. I don't think any of you. Rob from Peter to pay Paul. This is true. This is true. That's how it goes. That's how it works. Rob from Peter to pay Paul. Totally. Absolutely. So yeah, I just thought I'd bring that up because, it's so easy for someone to sit on YouTube and say, oh no, just call the bottom of the market and just throw all your money at the bottom of the market and just buy everything there and just like watch it go up and just turn it into an absolute fortune. Wouldn't it be nice if everyone could do that? I think it would be absolutely fantastic if everyone could do that. Pity everyone can't, eh? Why can't we do that? Why can't they just make it easy for us and just like say, just that's the top, just sell, sell, sell. That's the bottom. Just buy, buy, buy. That would be great. Good morning, investors. As Kevin says, how's it, Kevin? Good to see you. I presume it's still cold in Scotland. Only if you're prepared to lose that money. Totally. Absolutely. You see, that's the thing. This is the whole point. And what that guy actually turned around and said on YouTube was, take your last money, take your last $5,000 and put it at the bottom of the market. And then it's going to turn into hundreds of thousands of dollars or millions. I don't know what. Okay, so, and that's the thing. Who in their right mind is prepared to put it all on black or all on red and lose all their money? Because there are a few people out there that will do it. There are one or two people that will go to the casino and put it all on red. I don't know, I suppose. I'm not that type of person. I'm the type of person that I'm the stay in the game type of person. I'm the type of person that finds a way to stay in the game. That's why I've got these strategies and systems in place, because I prefer to stay in the game. I don't want to get booted out of the game at any given time. That would be silly. But there are those that will throw it all in and hope for the best. And you see, the thing is, if you, for example, on the Bitcoin, once again, I'm bouncing around, and somebody said I bounce around too much, but here we go. But if you do take all your money and throw it in at the bottom of Bitcoin, there are those, for example, if you have a lot of money, let's say you have, well, let's not say a lot of money. Let's put it this way. Let's say you've got $50,000 in the bank and you decide to throw $5,000 at Bitcoin right now and say, I'm going to hold this for as long as I possibly can. Bearing in mind that the market can remain solvent longer than you can remain liquid. We get that. But maybe with the $50,000 you've got, you'll be able to remain liquid long enough for this to go further down, then turn around and go up and make you an absolute fortune. I don't know. Maybe that might be an option. If you have a rather large amount of money and you want to throw a rather large amount of money at this with a view to holding it for as long as you possibly can, down to a certain level, and saying that, yes, I can, call the bottom here, and it shouldn't go much past that. But just always remember that saying: the market will outplay you. It'll be solvent much longer than you will be. So yeah, it'll stay in that position much longer than you can remain liquid. You often say that losses often get to a point where you just can't hold anymore, where you just can't do it anymore, where you just know, I'm done. I can't hold on to this anymore. I've got to give up now. I've got to let it go. I've got to, be on my way sort of thing. And like, I can't take this loss anymore. It's just getting worse and worse and worse and worse. And then they sell up at that point. And the minute they sell up, what does it do? It goes back up again. And you think, oh, why did that happen? That's basically how it works. You know, for example, it'll keep on going down, 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 down. Like Bitcoin, for example, let's say you were in at 125,000 up there, and you bought right at the top, as some people do. Like you buy and you think, this is going to go to 200,000, and then it does this, okay? And there's a point where you go, can't anymore. I've lost so much money down to here, and I'm on leverage trading, and I've lost hundreds of thousands. So then you just sell, and then it bounces and goes back up. That's just so evil sometimes. That's how the markets work. By the way, that's exactly how the markets work. Always. As Kevin says, not raining yet, no snow, and the nights are getting longer, so I'm holding on to the positive. I love it. Absolutely love it. We've got summer here in Cape Town at the moment. February is our hottest month. It's always our hottest month. So it gets pretty warm down here. And of course, living at the coast, it's a bit humid as well. So yeah, it's tricky. It's very, very tricky. Yeah, I can tell you that. It's insanely warm down here. So silver, also big move down. You see, this is also, if you happen to buy it here because you got caught up in the hype, because that's normally the case. You get caught up in this hype. Oh, I want to buy, I want to buy, I want to buy. And then it goes like that. And then if you don't have a stop loss, if you don't do what I say in the business plan and put the stop loss in place, and then get taken out for a small loss and just walk away and say, I was wrong, I made a mistake, just accept it, walk away, next one, next trade, okay? That's the best way to do it. But so many guys will hold on. And then you get to this point at the bottom here. So you bought right at the top, and then it gets to this point here, and you give up and you say, I've lost so much money. I gotta sell. Let's say you had $100,000 in there and you only had $100,000 and the leverage trading took it all the way down. You've only got $30,000 left here. And you're okay, I can't lose the last $30,000, so I'm going to sell it. So you sell it, and then you see this going back up. And you think, oh, come on. So what do? I know what you do. You do exactly what you're not supposed to do. You buy it back there. Instead of going to another trade or another product or another Forex pair or another commodity, what do? You see this going up and you buy it back because you think, well, it's going to go back now. So I'm just going to buy it back here and get my money back. What do? You buy it right at the top again, and it goes all the way down, makes even more money. So now that $30,000 that you had left has now become $15,000 because you get out here. What does it do the minute you get out? It does that. It goes back up again. Now the question is, will you do it again? In all likelihood, you probably will, because that's what traders do. And then they blow the account and they wonder why. They wonder why they blew the account. How did I blow the account? What happened? What did I do? And then you're off, as the thumbnail says, to get a real job. Okay. Yeah. Gosh, it's terrible sometimes. As they say, don't invest money you can't afford to lose. Not raining. Okay. Would you think silver would be booming because they need it for so much things like tech nowadays, and it's in short supply, less than gold? They use margin requirements to manipulate the price. Yes, totally. Okay, Kevin, on the silver, one thing you got to understand about commodities, and this, I'll go over this very quickly, and that is when the dollar index comes down like this and starts failing, okay, and starts doing this nasty falling thing, okay, then people start moving in, the commodities start doing better because they are kind of pegged. And also, what you find is it becomes what I call a super cycle, because the commodities start becoming more valuable in the sense that also when the economy is under pressure, I'm trying to do this as simply as possible, and maybe the informed money, the big money doesn't want to invest in the shares and the indexes at the moment. They don't want to take your pension fund and put it in there because they're afraid. They're afraid. They're not sure. The Fed's in focus. There's a few things in focus. They're thinking this is going to fall. And if they're thinking that the index might not hold, okay, or the shares might not hold, they start thinking, maybe I should put it into silver. Maybe I should put it into gold. It's safer there because informed money or investment money, they can't hold more than 5% cash generally. Most companies can't. Most investment brokerages cannot hold more than 5% in cash, so they need to invest it. But you can't always just invest it in shares that are possibly going to crash. So if they're not sure, if they're unsure, if they have a feeling that it's going to go negative, then they might move it into those commodities. So very often it doesn't really apply as to what they're going to use it for. Apart from in the recent past. In the recent past, there was a high demand for things like copper, for example, because the Chinese were building so many things. They were building loads and loads and loads of stuff in China for no real purpose. I mean, I don't know if you've noticed, but they've got these like 4-lane highways or 12-lane highways, no cars on them, that type of thing. So here's the issue, right? So what happened there was everybody got involved in that super cycle. Everybody was buying copper and gold and silver and all the rest of it because the Chinese were just buying it up, and using it to build their infrastructure. And they built the most amazing infrastructure, okay? But then they realized they got to a point that we've built all this infrastructure and we got no one to use it, so we're going to stop building that. So almost overnight, they stop using all these commodities. Overnight, they say, stop. We're not going to do this anymore. So now you've got all this production. We've got all this stuff available, all this copper, gold, silver, whatnot available, and overnight it gets stopped. So it starts plummeting down again. Now you're coming back into a cycle where the dollar weakness is playing in, where investors are not sure where to put the money. So it's more of a value purchase than anything else at the moment. When I say look at fundamentals, that's what I'm talking about. I'm talking about looking at the bigger picture of fundamentals, not the little things like interest rate cuts and CPI and jobs figures. The bigger picture, like what are they actually doing with metals? What are they actually buying? What's happening in the world? Those are the fundamentals that you should be paying attention to over time. Those are the things you want to know what's going on, because it is going to, somewhere down the line, it's going to affect this trade. Somewhere down the line, it's going to play a part in this trade. And that's what's important, okay? So that's what I was trying to get in. I'm watching from Liberia. Welcome from Liberia. When you say please teach me well, I like I said earlier, I do my best and I try hard to make sure you all get the best information that you can. But understand that nothing I say here constitutes financial advice, and I'm only giving you my experience and giving you what I can give you that hopefully will help you along the way somewhere down the line. Deep Sea, hey Rumble Buddy, it's Billy from Montana. Sorry, it's been a while. I had to get another job to help pay for this. Good to see you again. Thanks, buddy. As per my title, get a real job. Sorry, bud. But yeah, I get it. You know, it's tough, and that's why I like to put the reality out there to everyone as well. That you're not just going to get into trading and make a fortune. It's not that easy. And as we discussed just a few moments ago, and I don't want to repeat myself, is you can't just take all your money, put it in at the bottom, and it'll just go up and make you a fortune, because none of you can call the bottom. Nobody here said anything to me about that Bitcoin when I said, well, you put all your money into Bitcoin now because it's dropped 50%. And none of you are interested in doing that. And I'm not. You see, how do you know it's the bottom? How do you actually know you're at the bottom? You don't, because there is no bottom, there is no top. That the market doesn't work like that. This is not a supermarket. This is an area where you have to determine value, and it's not easy to do that, is it? I'm going to take that trend line out because we don't actually need that trend line. Now you'll see that it's come back up and it's come back into this money. I determined that money because there's a bunch of red candles falling down there and there's a green candle before that. That determines that there's a bunch of supply of money lying there, okay? So it comes down, comes back up, takes that money and probably starts going down. You can use that if you want to. You don't have to use that. That's just something that I do. And supply and demand sort of areas that you can pick up in between the resistance and support, in between the trends. The trends are important, but this trend has now moved. So I took that trend line out, but this trend has now moved. It's over there now. So you've got to be careful of that trend. So what you might want to do is wait for that to break through this level here and give you a break to the downside, because that will give you quite a decent short to the downside here, quite a lot of risk to reward. So if it breaks past that support, it might be worth a good trade, the gold. It might be interesting to see where that actually goes. Deep Sea, I hope you, Billy, I hope you do well with your new job. And you can carry on trading. I'll tell you what, trading is addictive and it's fun. But, you know, it's really difficult to just make money in a second overnight. So many people think they can. And it really is difficult to do that. You don't just do that. You don't just jump into trading and make millions of dollars. Nobody can do that. And it's a hard truth that I have to tell people. If you're not going to treat this as serious, then you are going to need to get a real job. You are going to struggle with it. It's going to take you a good couple of years to get the feel for everything. Just simply alone, what I talked about now, with the fundamentals that we spoke about now of, for example, China using the steel in the past and using the infrastructure to build that infrastructure, and then it stopped. Those fundamentals, you need to know that. Donald Trump implementing tariffs around the world and charging people taxes on stuff coming and going in his country and affecting the markets. You need to have a bigger picture on that. Him sending his ships to Iranian areas, and you have to keep an eye on that and see, what is he doing? Why is he doing that? What's going on? Is that going to affect the oil price, for example? What happened to the oil price? Did you see what happened to the oil price? It shot up, it bounced up, it went crazy, and it wants to break to the upside. But everybody's raving about the oil price bouncing up. But it's hit this level now, and it's saying, I've kind of hit that level, and I'm thinking of turning back, you know? So be careful of that. Keep your eyes open. And that's why we draw these resistance and support lines in. Really important. As EIGHTCAP says, Bitcoin's price is too controversial to put a lot of money into it. You see, exactly what you said now is exactly what I'm saying. Is for someone to turn around and say, just call the bottom of the market and just put all your money in there and just wait for it to go to the top. It doesn't matter which product you look at. You're always going to question yourself when it gets to that point as to, is it a safe trade? Is this something I want to do? Is this something I want to put my money into? Will I be safe if I put all my money in there? Is this going to work? So many questions will come into your head, even though it's as cheap as chips. It's at the bottom. It's like, you can see this thing's taken such a big knock. You're going to, you see, there is no bottom. It can go lower. It can go much lower. In fact, it can go all the way to the bottom. Imagine Bitcoin ends tomorrow. It shouldn't, but what if it did? That would take it down to zero, wouldn't it? Then what? What happens then? Well, besides everything else going with it, I'm just, you know, so many people would lose everything. So I'm pretty sure there's a lot of Bitcoin people out there that have put all their money into it that have lost a lot of money in the last 3 months because it's dropped by 50%. From what I can see. Yeah. I was looking at oil and thinking the same thing. I'm waiting for a drop, as buying the top is just gambling. As you know, Kevin, I always buy oil at the bottom. And I've made quite a bit of money out of oil. I've also lost quite a lot of money with oil. So, yeah, you know, it's a bit of a bane of my existence, but there's oil for you. I like oil, though. I do like trading oil. It's a bit of fun. So, yeah, anything that you want to put your money into is going to be controversial. It's going to be, you know, you're going to look at it and think, should I or shouldn't I? And our oil as well, for example, it's breaking out. Quite frankly, Kevin, if oil does break out here and I do get a strong green candle, I may consider going for it because it's a breakout trade that you could follow quite well. If it breaks out and goes to 80, that'll be a nice one. But I've got a feeling it might just stop here and then sort of come back down again. Depends on the world and what's happening in the background as well at the end of the day. Yeah, it's been an interesting live show. Oh, here's the other bane of my existence, the US dollar ZAR. This one, it's driving me insane. But now what I'm doing is I'm actually waiting for it to break through the resistance. If it breaks through that and goes up, then I'll buy it. Because I do believe it should be a lot weaker. This thing should be 19, not flipping 15. But anyway, if it breaks through there and goes, then I'll definitely look at that as well. I'll definitely get involved in the US dollar ZAR again. Yes, no, then it will skyrocket. You're quite right, Kevin. If missiles start flying, then I think oil will get quite expensive, to say the least. But then there's going to be a lot of other problems, so you got to consider those issues as well. But yeah, I'm watching that breakout, and if it goes, then it might be worthwhile having a look at it and seeing if we can get something out of that particular trade. But guys, on that note, it is time for me to go, time for me to move on. So I am now going to call it a day and say thank you very much for being here with me on this live show. I hope you guys have enjoyed it thoroughly and having a lot of fun. Hopefully you learned something from it, as I always try and give you guys some good information from it as much as possible, so that you guys can go home with something after the live show, that you haven't wasted your time sitting here going, gosh, Rob's boring, isn't he? But hopefully it gives you some insight into the markets and into trading, and what I've learned will come over to you somewhere down the line. Thanks for watching. Don't forget to come back for next week's live show. At the moment, I've dropped it just to the Thursday because I've had a lot of things going on in the background that have been keeping me busy on the other side. So I've dropped it to the Thursdays for now. Once that's all settled, then I'll probably bring the Tuesday live show back as well. But for the time being, Thursday at 12 o'clock. And you still get the Monday videos, the Friday videos, the members videos every single day. I put out the members trade of the day in the morning. So I hope you guys enjoy those as well, and they're helpful. If you've got any suggestions for the members videos, feel free to give me some information. But thanks for watching, and let me not ramble on. Till the next one, enjoy the week ahead,